Hello everybody, today is Wednesday, July the 8th, 2015. My name is Michael of Global FX Club and this is the daily Elliottwave video. Just before going forward, please do pause the recording and read over our risk disclaimer. Okay, let's jump right into the swing of things. As of late, there are no open trades, and we recently closed out the pound dollar for plus 118 pips. Okay, so let's go right into the swing of things and look at the overall market. First, let's start out with the euro dollar. Euro dollar has been getting a lot of traction recently due to what's going on there in Greece, but nonetheless, though, the technicals are still playing out. As of late, we can see here by this formation that price is really held at the 61.8% fib and rejected it and then rejected it sharply. Okay, this is a 4-hour chart. All right, actually, I'll go ahead and then I'll minimize that a little bit so you can see in this box frame. Okay, so this is the 4-hour chart of the euro dollar. Okay, we recently rejected the 61.8% fib and then now have been a little bit choppy since then in light of all of the news and etc. Okay, thus far though prices are just hovering around that 76.4% fib, and in my opinion I don't rule out seeing a further backdrop into this 61% move before a drift higher. Okay, 61 comes in at 1.0857. So keep a close eye on a potential move from here before a bounce. I still think we head towards somewhere near the 100% move. That's always ideal. Okay, but in the near term, just in my opinion, I think backdrop into 108.57 should not be ruled out. A lot of this euro dollar move is also going to come on the back of the dollar index. Okay, and then looking at the dollar index, okay, again, the dollar index, you favor that move higher, right? You see that 100%, we broke that 61 critical fib, okay, and then whether how far we pull back, we'll leave that up to the market to see. Okay, that recent backdrop to the 123.6 fib that left for this move, AB, you could call this a C wave, and then now we have been drifting higher and what appears to be a WX, and now looking for this Y move. Okay, and I'll go ahead and I'll label that. Again, this is the US dollar chart. Okay, here, and then ideally looking for this move, right? And that will come into the 100% extension before the possibility, in my opinion, of a down drift on that angle. So keep a close eye on this US dollar chart. This will be favored into the end of the week, into next week as well. Okay, so a similar move like that, can't also rule out this whole target. So this target zone, we want to see prices really hold and stay below, so this could be a first entry point, and then if it breaks and closes above, I will exit and then look to enter at higher levels. All right, so that's for the that's for the US dollar index. And interesting fact, here we have the dollar CAD. All right, so dollar CAD actually already hit this 100% fib. So for the US dollar, keep your eye on that, because if the US dollar could really start to make that drift higher, then obviously we see higher levels for dollar CAD, and then dollar CAD could head somewhere near towards that 123, even the 161 fib, and we look for alignment in these two. But if we get a spike higher, and then a 4-hour close, that will shake out some early short positions. Momentum divergence is starting to develop, just not fully there yet. Okay, Okay, it's just not fully there yet. So dollar CAD will be something of interest and something to closely monitor alongside crude oil, right? Again, with crude oil, dollar CAD, they tend to really move together. We recently broke slightly below the 50%. So the big target, the big area to keep an eye on is going to be that 61 into the 76.4% of retracement areas before a possible bounce. We could see a possible bounce beforehand, but again, very similar to that of the dollar CAD, it could just be a short-term bounce before lower levels. Okay, um, so ideally something of this magnitude is a favorite. Okay, is a favorite and could ideally happen. All right. Away from that, let's take a look at the dollar yen. Okay, the dollar yen here. This one played out pretty well. Okay, still could see some downside into this key area here. Before a possible bounce. And then what we've seen already with the dollar yen is this W to the X, pretty much nipped that 100% fib before backing off. Okay, putting it through the body, hit that level ideally, and then reject it. So that's why I always like looking at the 100% fib first. The 61 is obviously big, but on the backdrop, that first move can be ruled out on that angle. So we ideally had WX, and then now looking for that Y move. So again, dollar yen first sell off ideal, and then look for higher levels in my opinion before resumption of the downtrend. WXY into a bigger W, and then X move, then Y lower again. All right. Aussie dollar has been selling off like a monster to say the least. Okay, here WXY, this would be the bigger W here. Okay, the recent lows followed by this high, which nailed the 100% fib extension, and then now we look for. So it's holding at 76 fib. That's not typically that big in my book, but it is holding so far. If it does break and close below this level, then you're looking for that 72.51 level. I prefer that 72.51 level for longs. We're getting some divergence, but obviously, or just in my book, we need a bit deeper. So something that we could possibly see is a possible short-term rally to shake out those shorts, get them kind of off the books, and then look for a possible sell-off in the medium term, back down to that 100% move that we are eyeing. So can't rule out something here. I'll have to see a little more fluctuation, but ideally this is of favoritism in the near to medium term. Alright, so we're going to stop there. I want to thank you guys for watching today's video. If you have any questions, please do not hesitate to email us at info@globalfxclub.com. Jump in that chat room. You can access questions there too, or Skype us at Global FX Club. Cheers everyone, and good luck trading.